Welcome back to TheChainNetwork, clear, honest education for anyone stepping into crypto and digital finance. No hype, no jargon left unexplained. Last time we looked at DeFi for normal people and how decentralized finance rebuilds the banker's open code. Today we look at the bridge that connects the blockchain to the physical world and to the very assets that traditional wealth is built on. Tokenized assets and real-world assets, often shortened to RWA. As always, this is education, not financial advice. We are explaining how these tools work, not telling you what to buy or when. When exploring the evolution of the cryptocurrency ecosystem, the conversation is rapidly shifting away from purely digital speculative assets toward a massive structural bridge connecting the blockchain to the physical world. This concept is known as real-world asset tokenization, or RWA. For a disciplined investor focused on stable accumulation, this is perhaps the most significant milestone in financial technology. It is transforming the blockchain from an isolated sandbox into a highly efficient global ledger capable of tracking, dividing, and trading the very things that form the bedrock of traditional wealth. To understand tokenization without any technical fluff, let us throw away the word crypto and look at a familiar, real-world British concept, the physical property deeds to a house or a land registry certificate. If you legally own a commercial building in London, you do not physically carry the bricks and mortar around with you to prove it belongs to you. Instead, you hold a legal piece of paper, a deed, certified by a trusted central registry. That paper represents your ownership of the physical asset. Tokenization is simply the modern upgrade of that paper deed. It takes a real-world asset, whether it is government bonds, gold bars, commercial real estate, or even private corporate debt, and creates a digital representation of it on a public blockchain network. The token sitting inside your self-custody wallet acts as a highly secure, un-falsifiable digital title deed. The token is tied directly to the real asset via watertight legal wrappers, and whoever holds the digital token legally owns the underlying physical property or financial instrument. Let us look at one of the fastest growing and most practical categories of tokenized assets, government securities. In the traditional financial system, if a private individual or a company treasury wants to park their cash in safe, yield-bearing US Treasury bills or UK gilts, they have to navigate a maze of traditional brokerages. The process involves paperwork, restrictive settlement windows, and high minimum investment thresholds. Major global financial institutions, including titans like BlackRock and Franklin Templeton, have recognized this friction and have poured billions of dollars into launching massive on-chain funds. By tokenizing these low-risk government bonds, they have turned traditional yield into a digital token that moves as fast as an email. If you hold a tokenized treasury asset in your wallet, you are receiving the exact same daily interest generated by those government bonds, but with a massive structural advantage. You have complete 24/7 liquidity. You do not have to wait for the London Stock Exchange or Wall Street to open on a Monday morning to rebalance your position. If the market presents an ideal entry point for an asset you want to accumulate at midnight on a Saturday, you can instantly swap your yield-bearing tokenized bond for another asset, entirely skipping the traditional banking delays. Beyond institutional bonds, tokenization introduces a revolutionary concept known as fractional ownership, which completely dismantles the traditional barriers to entry for premium investments. Imagine a prime commercial warehouse or a high-end residential block in Manchester valued at £10 million. For the average individual, buying that property outright is an absolute impossibility. But if that property is tokenized, the ownership can be broken down into 1 million individual digital tokens, each worth exactly £10. Each token holder automatically receives their exact pro rata share of the rental income collected from the tenants, distributed straight to their digital wallet automatically via smart contracts. This allows a disciplined accumulator to steadily build exposure to stable, cash-flowing, brick and more to real estate, with small, consistent purchases, constructing a diversified portfolio that was previously accessible only to ultra-wealthy individuals and institutional funds. However, approaching this emerging frontier with proper operational discipline means carefully weighing the practical considerations. When you hold native cryptocurrencies like Bitcoin, your ownership is entirely self-contained within the blockchain code. But because real-world asset tokens are inherently anchored to physical things, you are introducing a bridge back to traditional legal and counterparty risks. If you buy a tokenized gold bar, your security relies heavily on the physical vault provider actually holding that gold in a secure facility, and on regular, independent audits, proving the digital ledger matches the physical inventory. Furthermore, because these tokens represent real-world financial securities, they operate within strict legal boundaries. Unlike anonymous crypto trading, accessing premier tokenized assets often requires navigating regulatory compliance frameworks, meaning your wallet must be whitelisted through a verified identity check before you can interact with the primary fund. For a calm, methodical routine when evaluating this space, treat tokenized assets as the ultimate tool for capital preservation and strategic allocation. Build your strategy around established, institutional-grade tokenization protocols that display absolute transparency, open-source legal documentation, and real-time proof of reserves. By utilizing these secure digital title deeds to anchor your capital in real-world value, you can maintain a highly productive, yield-bearing treasury right inside your self-custody environment, completely independent of traditional banking hours and fully prepared for any market condition. So that is tokenized assets and real-world assets made clear. It is the paper deed upgraded to an un-falsifiable digital title, bringing bonds, property, and gold onto the same ledger as your crypto, with the legal and counterparty checks that come with anchoring to the physical world. Remember, this is education, not financial advice. If it helped, subscribe and search TheChainNetwork to find the full set of guides. Next, we look at bear market survival and how to protect your capital and your mindset when the whole market turns against you. I will see you there.